Good evening, my dear friends. I'm your TaxKaTeacher, CA Karan Sheth, and yes, we are again here to attend indirect tax live revision lectures for November 23 attempt. Okay, in a very swift, precise, and at the same time detailed manner, right? Where we will be covering all the concepts in depth, but in such a way that it is not just crisp and precise, but at the same time, you remember it till the last day of the exam. Are you all getting it, my dear friends? Yes or no, guys? Yes, absolutely correct. And we are yet again absolutely out here, okay, back at 6:30 p.m. to make sure that you all guys are out there, okay, getting all the concepts of GST bang on point. Did you get it, guys? Absolutely. So, all I want to tell you is that today we are going to cover two topics. One is composition scheme, and the other is time of supply. Composition scheme and time of supply, right? Also, while you all are viewing this lecture, I want you all to comment in the comment section which is the next chapter that you think I should pick up. Please tell me, guys. Please tell me. I'll be more than happy, okay, to help you all revise it, right? Because my entire objective is that I want to give it all. I want to make sure that I can help you in each and every possible way that I can in helping you secure 100 marks, okay, at least 75 marks out of 100 in indirect tax paper. And I really want that people who have not even studied ITT, if they just watch my lectures, it's more than enough. It's more than enough at their end, and you will definitely score a bomb, okay, in your indirect tax paper. Is that very clear, my dear friends? Absolutely. So, guys, let's start, okay, with composition scheme. And also, while you're viewing this lecture, guys, if you genuinely like the effort that is being put up, if you genuinely like what I'm doing, please like and comment, guys. Please like and comment. It means the world to me. And consider that as your Guru Dakshina. Okay, and I'm sure that is the least you can do at your end, considering the content that I'm giving and also the summary notes, okay, that I have published. Okay? So now, guys, coming straight to the point, we are doing composition scheme. We are doing composition scheme. Okay. First things first, my dear friends. Composition scheme. Who takes composition scheme? Small taxpayer. Now, this small taxpayer is definitely defined by government. How? We have specifically mentioned, my dear friends, that in preceding financial year, if the aggregate turnover does not exceed 150 lakhs or 75 lakhs, 150 lakhs or 75 lakhs, then in current financial year, you can opt for composition scheme. You can opt for composition scheme, but only up to 150 lakhs or 75 lakhs. Understand, here there are limits both the ways. I don't know, a lot of people jumble up things, they don't understand, and eventually they'll end up giving the wrong answer. But understand, my dear friends, here there are two things involved. One is that in preceding financial year, aggregate turnover does not exceed 150 lakhs or 75 lakhs. Now, you will check this limit of preceding financial year to, okay, conclude on one fact that in current financial year, let's say, for example, if the preceding financial year was 2023, then in 23-24 on 1st April, can you start opting for composition scheme? Can you take composition scheme? And if the turnover is less than 1.5 lakhs, 1.5 crores, simple you can. If not, then definitely you can't. So point number one, that. Point number two, understand that in case that last year it was, let's say, 100 lakhs, which is not exceeding 150 lakhs. So in current financial year, you took composition scheme. Now that you've taken composition scheme, another thing, can you apply that composition scheme? Can you pay GST as per composition scheme for unlimited turnover? For unlimited turnover? Tell me, tell me, guys, is that correct? Absolutely. You will pay, okay, composition, you will pay taxes for composition scheme, not up till unlimited turnover. You will pay taxes for composition scheme only for, okay, only up to 150 lakhs or 75 lakhs, whatever the limit is applicable to you. Did you get it? Am I audible, guys? Am I audible? Is my voice clear? Just give me a checkpoint on that, or else I'll have to check myself. Just a second. Hmm. Am I audible, guys? Did you get it? Am I audible, guys? Am I audible? Yeah, I'm audible. Okay. So that is one thing, guys. That is one thing. Please understand that. Okay. So you can take composition scheme in current financial year only up to 150 lakhs or 75 lakhs. So if you exceed that limit in the current financial year, right, which you will obviously get to know because you know what, how much amount is getting credited in your bank account, correct? So if you, okay, use that logic, then in that case, understand, okay, once you exceed 150 lakhs, you will have to start paying taxes per normal scheme. Is that very clear? Yes. Okay. So that is one thing that I wanted to discuss, my dear friends, which is very, very, very clear. Also, 75 lakhs Avni is applicable to whom? 75 lakhs is applicable to special category states, and which are those? Okay, the way I help my students remember is very simple. All northeastern states except Assam plus Uttarakhand. Now it's very important that you at least know what are northeastern states. Okay. So understand it starts from Arunachal, Meghalaya, Manipur, Tripura, uh, Sikkim, correct? And what is left? Nagaland, correct? Okay. And there is one more left, I guess. और कौन सा बाकी है? Mizoram. Meghalaya, Mizoram, Tripura, Manipur, Nagaland, and Arunachal Pradesh, right? And Sikkim, correct? Now understand one thing, West Bengal nahi aata pehle to. And second thing, okay, very, very, very important, that even though Assam is a northeastern state, he will exclude Assam because understand Assam is one of the most developed states in Northeast. So for that, that state can easily enjoy 150 lakh ka limit. But these smaller states, okay, which are less developed, where the entire economy understand, okay, is completely dependent on what? Is dependent on correct tourism. They cannot afford 150 lakhs because if they land up taking 150 lakhs, the only tax they will land up collecting from the taxpayers is 0.5% CGST, 0.5% SGST, right? And I'm sure with such meager tax, you cannot run your state, correct? That's it. So that's the only reason why Assam is excluded and other states are subject to 75 lakhs. Uttarakhand, the same logic. It's a hilly region and tourism is the only way to make money there. That's it. Okay, so remember it in that way. And this will really help you also remember your 40 lakh ka limit in registration. So just telling you that. Also, understand one thing, the entire composition scheme is divided into two parts. Okay. The entire composition scheme is divided into two parts. One is 10-1 and other is 10-2. In 10-1, understand, okay, in 10-1, what I talk about is very simple, manufacturer, trader, service provider. And in 10-2, what we talk, I'm so sorry, restaurant wala, restaurant. And in 10-2, what we talk about is very simple, okay, it's only the service provider. So 10-1 specifically talks about manufacturer, trader, restaurant wala, and in 10-2, what we talk about is only the service provider. Is that very clear, my dear friends? Correct. Okay. So that is one thing that I really wanted to make sure that you all are categorically very, very, very clear about. Okay. And that is 10-1, we talk about these three people, 10-2, we only talk about service provider. In case of manufacturer, the compound rate is 1%, trader 1%, restaurant is 5%, and service provider is 6%. The only issue with trader is that 1% will be multiplied only with taxable supplies, right? So now, okay, be it manufacturer, be it restaurant wala, or be it a service provider, their respective rates will be multiplied with what? Both taxable and exempted supplies. A lot of people will say, sir, that since the supplies are only exempt, okay, why will I multiply here? Okay, 1% or 6% or 5%, whatever the rate is applicable. Why? Because the supply is only exempt. No, you are incorrect. Understand, we are in compo scheme, and in compo scheme, we are dealing in special scheme, and this special scheme has special rules. Exempted supply, okay, when I say, or taxable supply, when I say that from the perspective of normal scheme. That in normal scheme, it is exempted. In normal scheme, it may be taxable at the rate 18% or 28%. But in composition scheme, understand, okay, they have categorically said where to multiply which rate to which supply. Is that very clear? Yes. Perfect. So that is my difference with respect to 10.1 and 10.2a. I'm so sorry. This is not 10.2. My bad, my bad. This is 10.2a. Okay. 10.2 is actually conditions with 10.1. Okay. So this is 10.1 and this is 10.2a. Okay. Perfect. Now, very important to understand that when we are specifically calculating preceding financial year का aggregate turnover, okay, and why are we calculating this? So that we can understand the eligibility part, right? That in the current financial year, is the person eligible to take compo scheme or not, right? Now, what are we going to add in this aggregate turnover? A beautiful way of summarizing it is very simple. Okay, Avni, when I say aggregate turnover, okay, what is the first thought that comes to your mind? Turnover, yani sales, correct? Now, that is what you need to take care of. When I say aggregate turnover, you will focus on only outward supplies. That's it. Outward, outward, outward. Once again, outward, outward, out. एक और बार, outward, outward, outward. The only thing you will take care is about outward supplies. That's it. You will never take inward supplies into picture. Doesn't matter whether the purchases that you have done, whether the supplier is going to pay tax on that or you are going to pay tax as per RCM, doesn't matter. Purchase will never come in aggregate turnover. First things first. Okay. Second thing, understand. Whenever I say, okay, whenever I say, let's say, for example, you are trying to understand whether in current financial year you can take compo scheme or not. Correct? So that clearly means in the preceding financial year, you must be having normal scheme. And in normal scheme, do I charge GST? Yes, I do charge GST. So, for example, let's say I have, sold goods worth rupees 10 lakhs plus GST is 1.8 lakhs. So, I've collected from the customer 11.8, right? I've collected from the customer 11.8. Now, understand one thing. Out of that 11.8, how much am I supposed to keep with myself? Correct, 10 lakhs. And 1.8 lakhs, you are supposed to give it to the government. So out of that 11 lakh 80,000, I will keep with myself 10 and give 1.8 to government. So basically what I'm trying to state is that 1.8 lakhs not is not going to stay with me, right? It is not my money, it is government's money. So when I say that government wants to check your turnover, okay, obviously you will not take the 1 lakh 80 part because only this much amount is going to you. Okay, this belongs to the taxpayer. So we will only take 10 lakhs. We will exclude the GST component. Okay. Also remember, my dear friends, when you are calculating aggregate turnover, okay, there is a concept called as exempt supplies, right? And exempt supplies, understand, okay, also includes non-taxable supplies. The classic example of non-taxable supplies are those supplies which are outside the levy of GST. Outside the levy of GST. Classic example of that is 5 petroleum products, okay, and alcoholic liquor for human consumption. So even if you have sold in the preceding financial year, let's say they give you the data preceding financial year, let's say that you have sold garments, okay, worth rupees 100 lakhs, and you have sold liquor worth rupees 20 lakhs, then in that case, understand the aggregate turnover will be 120 lakhs. Okay, so government does not give a damn whether what you have sold, whether your outward supply is taxable, non-taxable, exempt, taxable, intra, zero rated, domestic, doesn't matter. आपने अपनी ब्रांच को ही कर दिया है. You have actually supplied to your own branch. right? Let's say DMart Mumbai, Deem Supply hai, okay, DMart Ahmedabad. Government does not give a damn about any such things, right? Government says that, listen, is that your outward supply? If the answer is yes, make sure that you exclude the GST component, take the net amount, and include that in your aggregate turnover. I don't give a damn whether you pay tax or the opposite person pay tax. Also, understand if there is an outward supply where tax is payable as per RCM. So, for example, in this case, if I have to add, let's say this was liquor, correct? Let's say if I add something like recovery agency service, right? Let's say 10 lakhs. If you remember, if I am the recovery agent and opposite person is the bank, who pays the tax? Bank pays the tax. So in this case, there is an outward supply. There is an outward supply, but tax is payable as per RCM. So you are not paying tax. It's the bank who will pay tax. Doesn't matter. Did you make money out of this? Yes. Government just wants to check that. Have you made money out of this or not? Okay. Simple. Is this your outward supply or not? Simple. Keep it simple. So in preceding financial year, only thing you have to include is outward supply, outward supply, outward supply. Okay. Remove the GST component. End of discussion. Right. And okay. And one more thing, categorically they have said is that please do not include interest or discount. Okay. On loans, advances, deposits. So if there is any loan that you have given, let's say I've given you a loan of 10 lakhs and interest I've charged 1 lakh rupees. Understand, 10 lakhs that I've given is neither goods nor service, no GST. But that 1 lakh is definitely amounts to what? Supply of service, right? We just learned that in the supply chapter. But that will also not be included. Okay, that will also not be included. Is that very clear? Yes. So composition scheme, make sure that you will never include interest discount, interest discount, interest discount. But at the same time, when we will go to registration chapter, when I will teach you that the aggregate turnover out there, 10 lakh, 20 lakh, 40 lakh, after once you exceed, you have to register, you have to register, you have to register. In that, you will include interest. So in registration threshold, you will include. In compo, you will not. Right? So remember it that way, that in compo starts with C, you will cancel. You will cancel interest and loan payment. Is that very clear? Perfect. That's it. Just a second, guys. So that is very clear that you will, okay, take care of. Are you all getting it? Ria, Avni, are you all getting it? Right? Whoever are there, please make sure that you all reply, guys. You all reply, you all reply, you all reply. Okay, perfect. That's it. ये एक हो गया यहाँ पे. Okay. Next is, my dear friends. Okay, we are done with aggregate turnover, and I have also, okay, taken care of all the three notes that I have mentioned here. Okay, I hope you all are marking the same. Okay, and taking care of the same. Now that, my dear friends, is a classic example of aggregate turnover. Okay, now, okay, if you really want to do something, you can definitely solve this sum. Okay, you can solve this sum. Mr. Zafar of Assam. Okay, the first thing that you will think is, okay, if there is Assam, then I know 150 lakh is applicable to him. Okay, the turnover of 1819 is given, and you are supposed to find out whether he can take composition scheme in 1920 or not. Let's see. So this is obviously data for preceding financial year. And in preceding financial year, they have said they have made outward supplies of 50 lakhs, out of which 10 lakhs is interstate transaction. Doesn't matter. Outward supply, include. So you will include the entire 50 lakhs. Value of exempt supply, but out of that exempt supply, 30 lakhs amounts to interest. Will you include interest? No, MS. You will not include interest. You will only take care of 40 lakhs. Right? So out of this 70, 30 will go, 40 will remain. So for me, 40 is what is useful as the data, 40 lakhs. Third, inward supply. No, you will never take inward supply, irrespective whether it's RCM or FCM, doesn't matter. Turnover means sales, sales means outward supplies. So you will not include this either. Value of exports, outward supply, definitely you will include it. So there's 40, there's 5, and there's 50. So 95 lakhs is the answer. Correct? And yeah, that's how it is. 95 lakhs is the answer. And since 95 lakhs is less than 150 lakhs, definitely Mr. Zafar can offer composition scheme. Is that very clear, my dear friends? Absolutely. Okay. So a question something like this can definitely arise. Okay. Next is, my dear friends, 10 subsection 2. Okay. 10 subsection 2. By the way, Avni, Ria, MS, if you are a part of my Telegram community, did you all take out time in solving that sum of DCA? If not, then please make sure that you'll solve it and send it on my WhatsApp. I would really want to see and correct it. And if yes, then send it. Why are you waiting for it anyways? Okay. Next is, my dear friends, very simple. Okay. 10 subsection 2. When I talk about 10 subsection 2, my dear friends, when I talk about 10 subsection 2, the concept is very, very, very simple. Here they are talking about restrictions. That understand one thing in GST, always remember, okay, whenever there is a benefit, it will come with conditions. Either in case of ITC, either in case of compo, either in case of refund. Okay, this is definitely for sure. This is definitely for sure, my dear friends. Okay, remember this always. Remember this always. That benefit always comes with conditions. Now, 10-2 mein, my dear friends, what are we supposed to do? Very simple. Supply of, understand, these are the conditions that you need to take care of once you have taken compo scheme. So now, question is, when will you take compo scheme? In current financial year. So when will you observe, apply these conditions? In current financial year. Okay. So understand one thing. You calculated aggregate turnover of preceding financial year, in which, while you were calculating the aggregate turnover, you included everything on earth except inward supply, except GST, except interest. Now you have concluded that your aggregate turnover was less than 150 lakhs, and which is why now you are going ahead with compo scheme. Now that you have taken compo scheme, now that you have taken compo scheme, and you have taken compo scheme, my dear friends, when in current financial year, in that case, once you've taken compo scheme, ensure that the things that I'm mentioning in the following manner, you don't do that. You don't do that. You do that. Dare you do that. If you do that, if you do that, end of discussion. End of discussion. Okay. The compo scheme will lapse and normal scheme shall start. Okay. The compo scheme shall lapse and normal scheme shall start. Is that very clear, my dear friends? Absolutely correct. Okay. ठीक है. तो आज माय डियर फ्रेंड्स ये बात तो पक्की हो गई. ठीक है. नेक्स्ट इज वेरी सिंपल. Okay. When I talk about, okay, very simple. The first case that if, for example, let's say, okay, I'm a manufacturer, right? And I have opted compo scheme under 10.1, correct? I have opted compo scheme under section 10.1. Is that very correct? Perfect. Now understand, if I'm a manufacturer and I have supplied 100 lakhs of garments, right? Now I want to give some service. Government says that, listen, okay, you can give some service. Initially, though, it was banned only. Initially, in composition scheme, it was banned only. But government says you can give service, but only to a certain extent. Only, only to a certain extent. Okay. And what is that extent? Government said 10% of preceding financial year ka turnover or 5 lakhs, whichever is higher. Okay. So this is the current financial year ka data. इतना करंट फाइनेंशियल ईयर में बेचा है आपने. यू हैव सोल्ड goods worth rupees 100 lakhs in current financial year. Okay, in preceding financial year, your aggregate turnover was, let's say, 140 lakhs. So here what happens is you can give service, but to the extent of 14 lakhs or 5 lakhs, whichever is higher, that amounts to 14 lakhs. Okay, that amounts to 14 lakhs. Okay, Mohit Patwari, I will be providing the Hindi lectures. If you're looking out for November 23 attempt, from 11th of September, I will start revision for Hindi students, right? So that is also coming soon. But if you are able to understand English, it's better you wrap it up right now itself. Okay, Mohit, that's it. Right? And in case you are an inter CA student, the revisions are already up there in the playlist. Done. Okay. Now, so understand that is the maximum. Okay, 14 lakhs is the maximum amount of service that you can give in the current financial year. Are you getting it, my dear friends? Are you getting it? Are you getting it? Are you getting it? Yes, sir. Yes, sir. Yes, sir. Okay. Okay. Just telling you for your convenience, Mohit. Okay. Yeah. So now in current financial year, okay, you are a manufacturer. Understand, you are a manufacturer and you want to give service. You can give service only up to 14 lakhs. If you exceed the value of service more than 14 lakhs, that is where you contravene the condition. And that is where, my dear friends, you or your composition scheme lapse and your normal scheme starts. Your composition scheme lapse and your normal scheme starts. Are you getting it? Yes. So that is first. Okay. That is first. So if you are a manufacturer, trader, or a restaurant wala, understand, you can, you are already doing your stuff, but at the same time, understand, you can give service up to 10% of preceding financial year turnover or 5 lakhs, whichever is higher. Now, what about other things? What about other things? Tell me. Okay, next. Let's say, for example, I'm a manufacturer and I'm a manufacturer of clothes, garments. Correct? Understand that I cannot supply non-taxable goods. Okay. So I have already entered composition scheme. I have already entered composition scheme, but understand, I cannot, boss, I cannot, okay, sell my petroleum products or alcoholic liquor for human consumption, because the day I will do, my composition scheme lapse and I will start paying taxes per normal scheme. And this I'm talking about current financial year. Mark that. Acha. I also cannot make interstate outward supply. Also cannot make interstate outward supply. So, for example, understand, if I offer combo scheme, I only have to make supplies within the state, within the state, within the state. So, if I'm in Maharashtra, I can only supply within Maharashtra. Maharashtra to Gujarat, end of discussion. My composition scheme ends, lapse, and I will start paying taxes per normal scheme. Acha, on the same lines, understand, I cannot also supply, okay, goods or service through ECO, right? So if I plan, let's say for example, I'm Jethalal and I plan that now from, okay, just selling within the state, I need to start selling electronic items, okay, through Amazon, through Flipkart. End of discussion. I will have to stop, okay, paying taxes for a combo scheme. My combo scheme lapses, normal scheme starts. Okay. Because understand, the objective is very simple, that I will obviously supply goods through ECO only with the intent of selling it nationally, right? So वहां पे भी तो क्या होगा? There will be interstate outward supply. So government wanted to ensure that this is completely what taken care of. So interstate outward supply not allowed. Supply through ECO not allowed. Also, okay. If you are a manufacturer, okay, of what? Tobacco, ice cream, pan masala, aerated waters, and the recent amendment, fly ash bricks, building material, roofing tiles, all of that, right? Right? All of that. If you are a manufacturer of that, okay, then simple end of discussion, you are out of compost scheme. So let's say if I was manufacturing garments, but at the same time I started manufacturing, let's say, roofing tiles, fly ash bricks, okay, or cold drinks or ice creams, and I started selling that. Compost scheme done, normal scheme starts. Watch it. Gotcha. Gotcha. Yes. Okay. That's it. That's it. That's it. That's it. Okay. But understand, if I'm a manufacturer of garments and I all of a sudden think that I want to be trader of, let's say, Amul ice creams. Let me take franchisee of Amul ice creams. So they give me Amul ka ice cream and I purchase it from them at, let's say, 50 rupees and sell it for 60 rupees. Then in that case, I'm a trader. So is the trader restricted? No. But is the manufacturer restricted? Yes. Trader not restricted. You can continue with compo scheme. Manufacturer restricted, so you cannot go ahead with compo scheme. The- Keep that in mind. Acha, NRTP, CTP, any which ways they are coming for few days, right? Any which ways they are coming for a few days. Someone is coming either from some other state, CTP, and NRTP, someone is coming from outside the country. You will ask them to just pay 1% and then leave? No! Hell no! I will collect 18%, 28%, 12%, whatever is subject to them. I will not leave them with 1% and ask them to go. No, that will be too less to ask. I will make sure that they pay tax at full rate. No compo scheme benefit for such Videsi people, such outsider Gora people. Are you getting it? Yes. That's it. And the last case is, my dear friends, very simple. It's basically Proviso to 10.2. And Proviso to 10.2 says very, very simple thing. It says that, listen, boss, one for all for one. One for all for one. One for all for one. Okay. So understand, there is branch one, there is branch two. Okay. There is branch one, there is branch two. There is branch one, there is branch two. Okay. Now understand. Branch one wants compo, branch two wants normal. Can that happen? Not possible. Because understand, compo scheme is a PAN based scheme. So DMART Mumbai, DMART Ahmedabad. Understand, both will have the same PAN. So if you take the transactions of, so in PAN, all the banking transactions are recorded. So if I have the PAN of DMART, if I'm from income tax department, I have the PAN of DMART. Simple, I will have all the transactions. Once the ones that is done in Mumbai and the ones in done in Ahmedabad. Everything I will have the detail. Easily I can track. Got it? So now since it is PAN wise, and understand, DMART, even if I have 1000 branches, the PAN remains the same. The PAN remains the same. Right? So understand, if DMART says that I want to compo, it will apply to both the branches. If it says it does not apply, then no one pays. So when I say one for all for one, either both of them pay, either neither of them pay. Either both of them pay or either neither of them pay. Is that very clear, my dear friends? Is that very clear? Yes. Okay. So one for all for one. One quick understanding that compo scheme, my dear friends, is a PAN based scheme, correct? And okay, when we go to understand what is returns, there will be something called as QRMP scheme. So understand, QRMP scheme is actually a GSTN based scheme. Got it? Got it? So this is a compo scheme is a PAN based scheme. QRMP scheme is a GSTN based scheme. Is that very clear? Yes, that's it. So in GSTN based scheme, the branch can do whatever they want to do. So one is taking QRMP, one is not taking QRMP. Fine, because it's a GSTN based scheme. It depends on that branch. Whatever that branch wants to do, they can do. Right? Because both branches separate GSTIN number. But when it comes to PAN, both the branches have the same PAN. They have separate GSTN, but they have same PAN. So PAN, whatever they decide for all the branches. That's it. Okay. Done. That's it. And 10.4, 10.5 specifically states what, my dear friends? Yes. 10.4, 10.5 specifically states two things. That the best part about, okay, composition scheme is that a compo taxpayer understand, okay, he cannot collect GST. And since he cannot collect GST, can he get output tax? No. So if he is not getting any output tax, okay, he cannot even take ITC. Because understand, if my input tax is 1000 and the output tax that I've charged to someone is, let's say, 1500, only in that case, understand, only in that case, understand that out of that 1500, I will keep with myself 1000, and remaining 500, I will give it to the government. Is that very clear, my dear friends? Yes, sir. So that is all I wanted to know. Okay. So neither will I get ITC, neither I have to, okay, collect GST from the customer. Okay. As a compo taxpayer, understand one very simple thing. Whatever is my outward supply, okay, let's say it is 100 lakhs, and let's say I'm a manufacturer. Chup job, I will multiply 1%, that is 1 lakh, and I will pay that in cash. Okay. I will transfer that money from my bank account to e-cash ledger and accordingly pay it. As simple as that. There is absolutely no hassle in terms of computation of GST because, okay, there is no concept of ITC, right? And there are no classification issues because there is just one standard rate applicable to all sorts of manufacturers, all sorts of traders, and 5% for all sorts of restaurant wala. Is that very clear? Yes. Okay. Understand. Uh, understand. Okay. What 10.5 says? 10.5 specifically says that, listen, if you were supposed to pay tax as per compo scheme, sorry, if you're supposed to pay tax as per normal scheme because your compo scheme has lapsed, right? Either you've exceeded 150 or either you've contravened any of the 10 to wala conditions. Then in that case, instead of paying taxes per normal scheme, you are continuing to pay taxes per compo scheme. Instead of now paying taxes per normal scheme, you are continuing to pay taxes per compo scheme. Not done. Proper officer will send you a demand notice of section 7374. Okay. And simple. After that show cause notice, you need to reply. So now the question is, once the show cause notice is issued, my dear friends, okay, you need to give them reply within 15 days. And once you give them reply within 15 days, they will read the reply and proper officer will then issue an order within 30 days. Right? Very simple. Either they accept your reply or deny your reply. Right? And you need to make sure, right, that you give them details of the stock. Okay. Within 90 days from the date of such withdrawal, the details of the stock is required. Why? Very simple. Because understand, if from 1/4 to, let's say, 110, you are paying taxes for compo scheme. And now on 110, let's say compo scheme is lapsed because you have contravened something. So normal scheme starts. Correct? Now when the normal scheme starts, understand, you will have to charge GST. You will have to charge GST. But understand, the closing stock that you have not taken ITC of the same. And if you have not taken the ITC, you will add the input tax to the cost, and later on, there is cascading that will soon start happening. So, to make sure that the cascading stops, okay, government says that, listen, the closing stock that you will get the ITC of the same. You will also get the ITC of capital goods. Just make sure that you fill your details and give me within 90 days so that I can check on which can you get ITC and how much. Very simple. Got it? Yes. So that is basically done as per section 18(1)(c). We will do it later when we do ITC, but just for your reference, if you can recollect things, I hope you will be able to appreciate the point that I just mentioned. Okay. Perfect, guys. Perfect, 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 perfect. Okay. That's it. So, yeah, that is one thing that I wanted to tell you all. Then other points are very simple, my dear friends. Mention the words compo taxable person not eligible to collect tax on supplies, on all the invoices, on all the bill of supplies that you basically are issuing. Okay, the reason why you are basically issuing bill of supply because you cannot charge GST. You cannot charge GST, so you cannot even issue a tax invoice. Understand that. Okay. Next is very simple, my dear friends. Compo taxpayer shall pay tax as per RCM at normal rate of tax. Okay. Very simple. Compo taxpayer shall pay tax as per RCM at normal rate of tax. Now understand what I mean by that. Okay, very simple. Guys, understand. For example, if we just appreciate the fact that we recently did GTA service where let's say GST is at the rate 5% and let's say recipient is a registered person, right? What did we conclude? Who will pay tax? The registered person. Because he is already registered, he can handle this compliance. Except for one person. And who is that? Very simple. It is the TDS deductor. So in this case, let's say for example, if this registered person happens to be a compo taxpayer, right? Then in that case, understand he will have to pay tax as per what? As per RC. He will have to pay tax as per what? As per RCA. So now understand one thing, that this compo taxpayer is nothing but a manufacturer. तो manufacturer क्या कर रहा है? Tell me. Manufacturer is selling 100 lakhs of goods and this is 10 lakhs worth of freight that he has paid. So now the question is, compo taxpayer will pay 10 lakhs worth of freight to GTA, and on that 5% GST, that is 50,000, he will pay as per RCM. Okay, GST to government, and here 100 lakhs ka 1%, that is 1 lakhs, he will pay as output tax to government. So this is output tax and this is input tax. Total he will pay is 1.5 lakhs in cash. Got it? Yes. So here, if you can, observe things carefully, the input tax that I've paid, I have not paid it at 1%. I have not paid it at 1%. I have paid it at 5% only. I have paid it at 5% only. Is that very clear? Yes. Simple. As simple as that. Okay. So that's it. That is one thing that was very, very, very clear. And I hope you all have understood it very clearly. Okay. So yeah, that's it. That's it. That's it, my dear friends. That is one thing that I wanted to speak to you, and which is why understand that whenever a compo taxpayer, okay, has any inward supply where he's supposed to pay tax as per RCM, it is the correct normal rate which will apply. And here, if there is outward supply, there is the compo rate that will apply. Right? That's it. So just write that very clearly. Input tax liability at normal rate and output tax liability at, just write down your compo rate. Right? There's nothing to remember. There's nothing to remember. Just understand that when there is output tax liability, there is composition scheme. Simple. Inward supply, whatever rate he says, you will pay it. As simple as that. Okay? Done. And the next is, my dear friends, very, very, very simple. New scheme for service providers. 10 to A. Okay, the threshold limit here is for the entire part of India, all the states, all the union territories, 50 lakhs. 50 lakhs. Okay. And also understand that the rate applicable here is 3% CGST, 3% SGST, 3% CGST, 3% SGST. Very simple. Okay. Perfect. So the rate here is 6% in total. Okay, remember that. Here also, you will multiply with all kinds of supplies that you're doing. It doesn't matter whether you're making taxable supplies or exempt supplies under normal scheme. Okay, doesn't matter. You will multiply 6% with all the services that you are giving in current financial year. Just make sure that you don't do the following things, right? You are not, okay, supplying goods or services which are non-taxable. You are not making interstate outward supply. You are not making supplies through ECO. You are not basically supplying goods like, right? Now understand, here they've specifically mentioned that you are not supplying tobacco, pan masala, irritated water, ice cream, and flash brick wala pura bracket. So here they have mentioned both trader and manufacturer. So for example, doesn't matter. So for example, understand if I'm a CA, if I am a CA, right? And my income through practice is let's say 10 lakhs. And let's say I am a trader and I want to now become a trader of okay ice cream. And I have already taken compo scheme under 10(2)(a), where I'm paying tax as per 6%. Understand the day I start trading in ice cream or the day I start manufacturing ice cream, doesn't matter. Doesn't matter if you are a trader or a manufacturer. The day you do that crime, end of discussion, you are getting off the hook and you are getting out of compo scheme and you will start taking access for normal scheme. Got it? Got it? Got it. Okay? Yes. So in current financial year, that's how it works out. Okay. And in current financial year, understand. Okay, in current financial year, I wanted to ask, let's say for example, okay, my practice income is 10 lakhs and I'm selling garments, for example, for rupees 2 lakhs. Okay, 12 lakhs. Okay. So I'm trading into garments. But understand, I am a CA case and I'm registered under 10(2)(a) as a service provider, right? And I'm also selling few garments. Understand? So what will happen in this 12 lakhs? What rate will apply? 2% or 1%? Sorry, 6% or 1%? Understand, the entire 6% will apply because you are registered as a service provider here. Your main job is to provide service. So you're registered under 10(2)(a) scheme. So if you are governed under 10(2)(a) scheme, doesn't matter whether you are selling goods or service, you are subject to 6%. Acha, if you are registered under 10(1) scheme, right, and you are a manufacturer, restaurant or ice क्या है अपना trader, so you are a manufacturer plus let's say for example you are also providing some service, let's say you are providing CS service, chalo na, right? Then understand, right, up to 150 lakhs, up to 150 lakhs I will pay tax at 1% only, and here up to 50 lakhs, okay, I will pay 6%, right? Because it depends on which section are you categorizing yourself. Got it? Correct. That's it. That's it. That's it. ठीक है? तो ये क्या है याद रखना? Make sure that you remember these things. Again, you will not include interest discount in this case. Also, the fact that you will issue bill of supply and you cannot collect GST and you cannot avail ITC. Right? That's it. That's about 10(2)(a). And the last part about this 10(2)(a) is the concept of first supplies, which by the way applies to all of them. Manufacturer, trader, service provider, restaurant भी लिख देना यहाँ पे. Everyone in compo scheme, either 10(1) or 10(2)(a), is applicable for both the cases. Now, what is the concept of first supplies? Understand, the concept of first supplies will apply only in the first year of business. It will make sense only in the first year of business, which is why the name of the concept is also first supplies. You know, in Hindi it is said, "Pehla pehla pyar nahi beta, pehla pehla supply." Are you getting it? Yes. Okay. Now understand, my dear friends, what are they talking about? So they are talking about two things. Okay. One, you have to include something. One, you have to exclude something. Now we will not study that only. You will only directly give the answer. Trust me on that. And you will give the right answer. Okay. And you will genuinely give the right answer. And I'm giving you guarantee of that. Okay. So, fatafat. Now understand one thing. For example, let's say, for example, you are a man. Let's say, for example, you are a service provider, right? And and you are a chartered accountant, providing chartered accountant service. So in preceding financial year, your turnover was 40 lakhs. Correct? So in current financial year, you opted for compo scheme. Correct? Yes. I'm so sorry. I'm so sorry. I'm so sorry. I'm so sorry. Yeah. So you have recently become a chartered accountant, and what has happened is that this is your first year of business, right? This is your first year of business, correct? Now, you started your CA practice. What happened is from April to June, first quarter itself, your aggregate turnover looked pretty handsome, 20 lakhs. You made 20 lakhs, correct? Then from July to September, correct? You made 30 lakhs. Yes, in this quarter you clocked 30 lakhs. And from October to December, you made, let's say, 50 lakhs. Now understand, you need to tell me that this is your first year of business. Understand, this is your first year of business, right? And the CA service that you are giving under combo scheme, obviously the rate is 6%. And under normal scheme, just in case if you need that, it is 18%. Okay, 6%, 18%. Now you tell me if I have to calculate the tax payable. Okay, and as you know, that composition scheme, the compo taxpayer pays tax quarterly basis, like April, May, June ka he will pay on 18th of July, right? September ka he will pay on 18th of October, and December ka he will pay on 18th of Jan, and March ka he will, Jan, Feb, March ka he will pay on 18th of April, correct? Now understand one thing. What about the first quarter? What is the tax that he will pay? Yeah. Avni, Mohit, MS, Ria, please tell me. What is the tax that he will pay? What is the tax that he will pay? Correct. It's nil. Why? Because understand it's his first year of business and up to 20 lakhs, his turnover will be exempt. Up to 20 lakhs, his turnover will be exempt. Perfect. Okay. So his turnover will be exempt. Absolutely correct. Now, what will happen? Okay. What will happen in this case? Tell me. In second, what will happen? Correct. 30 lakhs multiply by 6%. That is 1.8 lakhs. Right? Because you have what happened is after 20 lakhs you opted for compo scheme and now you will pay taxes for a compo scheme. Correct? That is 6%. Okay. But understand October to December, will I apply 6% on 50 lakhs or will I apply something else? Tell me, tell me, tell me. Come on, MS. Tell me. Come on, MS. Avni, come on. What is it that I will pay? Correct. Okay. 50 lakhs will be multiplied by 18%. Why? Because I told you, my dear friends, that 150 lakhs का limit हो या फिर it's 50 lakhs. It doesn't matter. The limit works both the ways. First, you check the limit, okay, by checking the previous year cut turnover. Then you check limit in the current year. In current year, you check the limit because you want to give that benefit of paying taxes per compo scheme for a limited turnover. What is that limited turnover? Up to 50 lakhs. So up to 50 lakhs compo scheme. Beyond that, normal scheme. And I think we have reached beyond 50 lakhs. So if you, okay, aggregate the total up to September, it is 20 and 30, 50. So whatever is now the supply that you have made beyond September is beyond 50. And what is beyond 50, that is taxable as per normal scheme. So here, do you realize what did we do? While we were calculating the tax amount, the tax computation, we clearly, my dear friends, understand, we clearly, my dear friends, did not take this 20 lakhs. We did not take 20 lakhs. So this first quarter ka data 20 lakhs was not taken into account. Yes. But my dear friends, when we were calculating eligibility, when we were calculating what? Eligibility. Eligibility in current financial year. In that case, understand. In that case, understand that 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 you will take 20 lakhs. And I did, because only once I added 20 lakhs and 30 lakhs did I realize that September may we have exhausted 50 lakhs ka limit, and now I will have to start paying taxes for normal scheme because compo scheme has lapsed. Lapsed. Did you get it, guys? Did you get it, guys? Yes, sir. Okay. So that's it. That's all I wanted to tell you, guys. That's all I wanted to tell you. Right? That while we are calculating the eligibility, include include that 20 lakhs. But while we are calculating taxability, do not include. Kya? Do not include. Got it? And that is what they have said, okay, here. While determining the purpose of eligibility in current financial year, include the data. But for the purpose of determination of tax payable, do not include. Right? Do not include. Okay? That's it. Why will you not include? Because it is exempt. Why will you not include? Because it is exempt. Okay? So the first 20 lakhs exempt. Then normal scheme. Sorry, compo scheme. And beyond that turnover, normal scheme. Right? So that is one thing that you need to really focus on, my dear friends, with respect to composition scheme. Is that very clear? Yes. Okay. So make this very, very, very clear, my dear friends. And I hope you all understood, okay, how we actually go about composition scheme. ठीक है? Perfect है? Yes. Okay. Now, now we are done with my dear friends compo scheme. Okay, and it's 7:30. That was nice. Just in an hour or so, we have done a complete detailed analysis of my dear friends composition scheme. I'm also preparing a question bank of top 50 questions that can be asked in IDT paper, and in that, my dear friends, I have specifically crafted a question, right, where all the adjustments of composition scheme are covered in one question only. Take it. Do you want that? Do you want that? If yes, then please comment. Interested in the comment section. Only then will I be able to DM you. Okay? Take it. That's it. Done. Now we are done with that. Okay. We will now start with my difference time of supply. But let's do one thing. Okay, let's take a short break. Okay, it's 7:25 now, right? Let's come by 7:40. Okay, and start time of supply and also wrap up time of supply. Okay, perfect. Yes. ठीक है. Comment करो यार MSC or comment. You are in spite attending lecture since last 3 days. You guys have not commented on one lecture yet. Come on. थोड़ा तो यार हेल्प कर दो यार. ऐसे कैसे? Like थोड़ा तो ऐसा please you can help, right? Okay, guys, we are back and we are back with a bang. We are supposed to do time of supply, my dear friends. Let's do it. Let's do it. Let's do it. Okay, आ जाओ फटाफट से. Friends, understand. Firstly, why are we doing this chapter? Very, very simple. Okay, where do we have to send the answer of DCA? MS, you already know my number is this, correct? Okay, yes. So now understand, you can send it here. Okay. Now understand one thing, my dear friends. When it comes to time of supply, please understand one thing, my dear friends. We are talking about section 12, section 13, 12 and 13, 12 and 13, right? So here, understand, my dear friends, when I'm talking about 12, 12 talks about time of supply in relation to supply of goods, and 13 talks about time of supply in relation to service. Okay, 12 is goods, 13 is service. 12 is goods, 13 is service. Okay. So when it comes to goods, my dear friends, okay, when it comes to section 12 with respect to time of supply of goods, what are we trying to find here? We are trying to locate that date on which supply happened. We are trying to locate that date when supply happened. Are you getting it? Yes. Now, why is it important? It's very important, my dear friends, because understand there are so many events that happens when there is supply of goods, when there is supply of service. For example, in case of goods, there are transactions like recipient places an order, that is an event. Supplier removes the goods from his factory, that is an event. He receives it. So finally, the goods are delivered, invoice is issued, payment is made. Now, across all these events, which is that event? Which is that event when I can call, okay, supplies happen, supplies done. When the order was placed, when I removed the goods from factory, when invoice was raised, when payment was received, when? When? Are you getting it? Yes. We need to fix that. So accordingly, since there is no confusion, both in case of goods and in case of services, government has said, listen, nothing doing. Think about time of supply. Focus on goods, section 12. Focus on service, section 13. Period. If you figure out this, figure out everything, right? So, government said if it is supply of goods, and in questions it is categorically stated that it is normal charge, or let's say in question it is said that Mr. Supplier has charged GST to recipient. Okay, it's enough for you to tell that supplier is charged GST, and in that case, supplier understand is paying taxes per FCM, right? So if it is forward charge or normal charge, whatever you like to say, basically where supplier pays the tax, then 12.2 will apply. And under section 12.2, my dear friends, the concept is very simple. You are supposed to be concerned only with two events. One is date of issue of invoice, and second is last day to issue invoice, right? So one is the actual date when invoice was issued, and the other is the last date on or before which the invoice should have been issued. So one is actual, one is standard, one is actual, one is standard. Okay, costing की भाषा में बोले तो, right? Now understand one thing. When it comes to last date of issue of invoice, right? There are three events, right? There are three events. So in case of movement of goods, movement, what does it movement mean? Very simple. Let's say supplier. Supplier is okay delivering the goods all the way from Mumbai to Ladakh. That is movement. Okay, and movement can be caused both by supplier or by the recipient. Or recipient is coming all the way from Ladakh to Mumbai, collects the goods, goes back to Ladakh. Okay, where his godown or factory is located. So here it is caused by recipient. At the end of the day, there is movement. Okay, there is movement. Okay. Now, whenever there is movement of goods, government said the last day to issue invoices, date of removal. The last day to issue invoices, date of removal. And on the date of removal, actually, the invoice will be issued. In that two in triplicate, one for the recipient, one for the transporter, one for the supplier. One for the recipient, one for the supplier, one for the transporter. Got it? So it is at the removal only you are supposed to issue the invoice. So either at the time of removal or before that, not later than that. Okay. So last date in case of movement is date of removal. Now, date of removal, you will compare it with date of issue of invoice, whichever is earlier. Second, when it comes to no movement of goods, in that case, understand The concept is very clear. Date of delivery. Understand, in no movement, understand what is a classic example of no movement? Over the counter sale. Over the counter sale. For example, uh, okay, understand that there is a provisional store beside your house. So the goods are sold there and there itself. Okay, the opposite person does not know where you are going to take because you are not going to share your address with him, right? Simple. So for him, the goods are sold on the counter only, right? Correct. So that is the case. Or else, for example, or one more classic example of no movement of goods is, let's say, for example, uh, let's say Mohit Patwari has a factory. Okay, Mohit Patwari has a factory. Now, as a matter of fact, understand, when I say Mohit Patwari has a factory and he wants to sell it off, and that factory is in Chennai, and I am in Mumbai, I am taking the entire factory, right, along with land and factory building. So there, understand that factory building is immovable property, no GST. But the goods that they have, the machineries that they have, I'm also taking that. Now I will not shift that from Chennai to Mumbai because I want to now start running the factory there and there itself. So in that case, understand, is there movement of goods? Yes. Sorry, is there movement of goods? No. Right? Clearly there is no movement of goods because the machinery is there and it is still there only. It has not moved an inch. It has not moved an inch. And which is why, my dear friends, it was there, it remained there, and it got sold there. So in that case, government says, okay, in case of no movement of goods, okay, the last date is date of delivery. Third, in case where goods are sent on approval for sale or return basis. In case where goods are sent on approval for sale or return basis, in that case, okay, the last date will be date of approval or 6 months from the date of removal, whichever is early. Date of approval or 6 months from the date of removal, whichever is earlier. Correct. Okay. Next, my dear friends. Next is 31 subsection 4, continuous supply of goods. In this case, it will be date of issuance of statement of accounts, date of issuance of statement of accounts, or date of payment, whichever is earlier. Got it, friends? Okay. 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 So that is one thing that is definitely clear. Goods sent on approval for sale or return, date of approval or 6 months, whichever is earlier. Continuous supply of goods, date of issuance of statement of account or date of payment, whichever is earlier. Fantastic. Next is 12 subsection 3. When I talk about 12 subsection 3, we talk about reverse charge. And when I talk about reverse charge, understand, my dear friends, okay, here we are talking about a case where recipient is going to pay tax. So if recipient is going to pay tax, you will also observe the entire transaction from the end of recipient only. You will observe the entire transaction from the end of recipient only. So understand, my dear friends, in case of, okay, reverse charge mechanism, okay, there are three cases. Okay, if I am a recipient, you are supplier. If I am the recipient, you are the supplier. In that case, understand one thing, right? First act that will happen is I will receive the goods. Then what will I do next? Once I receive the goods, I will make the payment to you. Correct. So clearly that are the transactions. So once I will receive the goods. Second, I will make the payment. And third, 31st day from the date of issue of invoice, whichever is earlier. Whichever is earlier. Are you getting it? Yes. Okay. So first things first, date of receipt of goods. Second thing, I will make the payment. And third is 31st day from the date of issue of invoice. Perfect. Now, understand that when DOP comes into picture, date of payment, okay? Understand that when date of payment comes into picture, okay, concept is very simple. You are again viewing the entire transaction from recipient side. So in this case, date of payment will be date of debit in the bank account or date of payment entry in the books of account of recipient, whichever is early. So the first is date of debit in the bank account. What do you mean by that? Very simple. That on this day your bank account is reduced. Money goes from your bank account, right? And payment entry in the books of accounts of recipient. What do you mean by that? Okay, so let's say for example, if you make the entry creditor to cash bank, why? Because initially when you had did the purchase, okay, you had basically passed an entry purchase to creditor. Now you are paying the creditor, so creditor to cash bank entry. So when your accountant is passing that entry in the books of accounts, or very simple, when your accountant is actually seeing the fact that on this date your bank is debited, whichever is the earlier date. One, the entry whether in the passbook or in the cash book, passbook or in the cash book doesn't matter. Whichever is the earlier case. In that case, my dear friends, it's very, very, very clear. In that case, it's very, very, very clear that that is the date of payment. Got it? So mark my words, my dear friends. Mark my words. This is a very important aspect that needs to be covered. And understand, since you are talking entirely from the recipient's end, we are talking about date of debit in the bank account, payment entry in the books of accounts of recipient, creditor to cash bank, right? Because here there is an outflow of money because the opposite person is receiving goods, goods, goods. Got it? Yes. Next is my difference 12 subsection 4 voucher. In this case, when the supply is identifiable, okay, the time of supply will be date of issue of voucher, right? And in case where the supply is not identifiable, the time of supply is date of redemption. Why? Because understand that you will, okay, create a time of supply in this case only when there is clarity as to what is going to be supplied. So, for example, if I have a shop that has multiple products, okay, something like a shopper stop or a lifestyle, and you have purchased 10,000 ka voucher. Now, only at the date of redemption will I know that what have you redeemed. So I have to wait till that day, and only then will I get the clarity. Okay, now that you've purchased 10,000 worth of garments, so I know that the garments are subject to 12%. So let's say the voucher was issued in April, you redeemed it in, let's say for example, July. Now in July the supplies happened, so I will pay tax in August because I know now what has got redeemed. I know now what has got sold, and accordingly, I will take that rate and apply it. But when the supply is identifiable, so when I already know in future what you are going to sell, and that can happen only in one case where I am only selling one thing, right? So for example, let's say if I am selling only perfumes, simple. I know that whichever perfume you take, फिर वो jasmine हो या मोगरा हो या uh, I don't know, let's say rose हो, doesn't matter. Doesn't matter. At the end of the day, I know it's a cosmetic product. It will be subject to 28%. Then end of discussion. Then whenever I have actually, issued the voucher, that and that day itself, I will consider that the goods are sold. And next month at 20th, okay, of the next month, I will pay the tax. So that's the logic. Okay, correct. Next is 12 subsection 5, residual case. In residual case, they say is okay, 12 to 12 3 12 4. 12 to 12 3 12 4 if not applicable, right? Then understand the time of supply will be if the person files periodical return, date of filing return. If not, that date when the tax is paid. Next is 12 subsection 6, interest rate fee नहीं है वो late fee है. Interest late fee penalty. Interest late fee penalty for delayed payment of consideration. Interest late fee penalty for delayed payment of consideration. In this case, understand the time of supply that needs to be taken into consideration is that of date of payment. Is that of date of payment. Okay. I hope this is very, very, very clear, my dear friends. And I hope this makes sense. Okay. So basically, what does this mean is that whenever I will receive interest rate fee penalty, I will consider that day as the time of supply and अगले महीने का 20 तारीख I will pay the tax. Okay, next month का 20th I will pay the tax. Gotcha, gotcha, gotcha. Yes. Okay. So make sure that that is very clear, and I hope that makes sense, right? So we are done with section 12, where we are done with 12.2, 12.3, 12.4, 12.5, 12.6. Say it again: 12.2, 12.3, 12.4, 12.5, 12.6. Okay, correct. Next, my dear friends, we are going ahead with section 13, that talks about, okay, time of supply in relation to supply of service. Time of supply in relation to supply of service. So 13 talks about supply of service. Okay, 13.2, 13.3, 13.4, 13.5, 13.6. In that case, my dear friends, when I talk about 13.2, again, normal charge. 13.3, reverse charge. Okay, now 13.3 and 13.2, understand it's normal charge or forward charge. We will again look at it from the perspective of supplier, because supplier pays tax here. Only then will you, okay, think of 13.2. And whenever supplier, okay, pays the tax, you will view the entire transaction from supplier's end, right? So understand, when I talk about supplier, then understand, okay, when a supplier is supplying goods or service, for that matter, in this case, service, it is very important for you to understand. It is very important for you to understand that here there are three events that are majoritarily very important. One is date of completion of service. Second is as soon as it's completed, date of issue of invoice. And thirdly, as soon as the invoice is issued, date of payment. You will make the payment. Sorry, the opposite person will make the payment to you. First is completion of service, then you issue the invoice, and then you make the then you receive the payment. My bad, right? So if all these criterias are over, very simple, my dear friends, very simple. Okay, you need to then check which is your time of supply. So what government is trying to say is that, listen, take invoice as one of the major uh, as one of the major uh, trigger points. Okay, and I'll tell you how. And I'll tell you how. So, for example, if 1/4 is the date when the service is completed, okay, if 1/4 is the date of completion of service, if 1/4 is the date of completion of service, then in that case, understand one thing. If I issue the invoice within 30 days, right? If I issue the invoice within 30 days, understand that it is very important for you to understand that you have, it will be concluded that you've issued the invoice at the right time. So it's very important for you to gauge that have you issued the invoice at the right time or not. If you've issued the invoice at the right time, simple. You will compare out of these three events, you will compare date of issue of invoice or date of payment, whichever is earlier, right? But if you issue invoice after 30 days, right? Then in that case, understand, you will not wait for date of issue of invoice, and you will rather compare date of issue of invoice and date of payment, whichever is earlier. Got it? So always remember, okay, in your finals, out of these three, one date of payment will always appear. You have to now focus whether from semi-final, who is going to win, date of invoice or date of completion, right? So if you issue invoice at the right time, DOI will be compared with the DOP. And in case, okay, you don't issue invoice within 30 days, you issue it after 30 days, then date of completion of service and date of payment, whichever is earlier. Okay, that is very important, my dear friends. I hope I have made myself very clear. I hope I have made myself very clear. Okay, so do one thing, okay, and keep that in mind. Acha, also remember, just write down there, when it comes to banks, NBFCs, insurance companies, the same 30 days is 45 days. The same 30 days is 45 days, right? So remember that thing. Remember that thing very, very, very clear. Okay, there we go. Acha, by the way, date of provision of service or date of completion of service is one and the same. So always remember that can be used interchangeably. Okay. And yeah, in this case, if we have to define date of payment, there can be two dates visible in the question. Okay, date of credit in the bank account or date of payment entry in the books of account of supplier. Receiver nahi, supplier. Now there are a lot of times there is this question that appears, that's a date of payment entry in the books of accounts of supplier. Yes, payment entry as in payment receipt का entry. Payment done का nahi, payment received. You have received the payment, right? So that entry. And what is that entry? Very simple. Cash bank to debtors. So again the comparison is between the entry in the bank account, that is in the passbook, or entry in the books of accounts, whichever is earlier. Whichever is earlier. Okay, that's it. Done hai. Next. Next, my dear friends, something that generally a lot of people actually miss out on is this time of supply in case where excess amount is up to 1000. Okay, now in this case, okay, all I'd like to say is, my dear friends, understand, right? I give generally a short example to this. So just make sure that you are able to understand this very, very, very clearly. Very important to understand, friends. Okay, so for example, if I talk about your mobile phone bill, right? So from 1st April to 30th April, okay, they will give you service, correct? So your date of completion of service is 30th April. Got it? Perfect. Now the thing is, my dear friends, that date of issue of invoices, very simple, 15th April. Sorry, let's say, I'm so sorry, let's say 5th of May, right? And the payment that you make is on 10th of May. Now issue is that invoice was issued, the invoice was issued at 480 rupees. But you being a rich guy, you made the payment of 500 rupees. So you have made the payment 20 rupees extra in excess, right? So now understand, you will be taxed, okay, at what invoice is raised. So invoice is raised at what? 480 rupees, right? So simple in this case. This is the DOC, and within 30 days invoice is raised. Yes, 5 को raise हुआ invoice. Then DOI or DOP, whichever is earlier, DOI. So DOI में what is the amount written? 480. Simple. 480 will be taxed at 55, and you will pay the tax of that on 20th of June. Very simple. Okay. So here the time of supply is very simple. Time of supply is 55 for April month, and obviously the due date of that will be on 20th of June. ठीक है, and the amount we are talking about is 480 rupees. ठीक है, now understand that the 20 rupees extra that you have paid here, right, will basically be adjusted against the next billing cycle. It will be adjusted against the next invoice. It is actually in advance for the service that I will be receiving in the next month. So here when we talk about the May month, correct, right, when we talk about the May month, then in that case, my dear friends, okay, very simple, 31st May invoice payment. When it comes to invoice, concept is very, very, very simple. Okay, I can raise the invoice on, let's say, 5th of June, and payment can be done on 20th. Okay. Invoice is done on 5th of June and payment is done on, I'm so sorry, 10th of June. Got it? Perfect. Hai? Yes, sir. Okay. Now understand one thing, my dear friends. That year, the invoice was raised of, let's say, 200 rupees, of which 20 is already been given. Okay. So, which is why now I make payment of only 180. Right. Again, is the invoice raised within 30 days? Yes. Right. So, invoice or payment, whichever is earlier, in that case, okay, again, who will win? 200 rupees. Now, 200 rupees actually has a history, 180 and 20. Now, in this case, invoice was raised for the same date on 5th of June. But payment here, understand, was made on 10th of June, and here it was made on 10th of May. 10th of May. Do you realize this? Do you remember this? Yes. Okay. Now, obviously, in this case, this will be the answer. And in this case, this will be the answer. Correct? So government said that yeah, for just 20 rupees, you have to calculate so many things. Stop doing this. Government said instead of calculating this 20 rupees ka time of supply differently, okay, attach it with that 180 only, and for entire 200 consider the entire time of supply as date of invoice. So basically whatever invoice value is raised in the next month, 20 rupees is also a part of that. Then forget about that advance, whichever is earlier. Simple. Just take date of invoice as the time of supply instead of date of invoice or date of payment, whichever is earlier. Right? So government said take the entire 200 ka time of supply as 5 6 and end that discussion here itself. Okay, you don't need to calculate this. Okay, but this can happen only when the amount paid is excess up to 1000. So in our case, the amount excess was 20 rupees, which is up to 1000. So for example, if your bill amount is 2000, okay, this clause will be applicable only when you have made the payment 3000. If you made the payment, let's say for example 3500, end of discussion, the excess payment is 1500, which is more than 1000, and in that case the normal clause of DOI or DOP, whichever is earlier, will apply, but only when the okay invoice is raised up to 1000. Understand, only invoice will be issued, and that is what will make sense. Got it? Yes. Okay. Next क्या है भाई? Okay. Next, my dear friends, is 13 subsection 3. When I say 13 subsection 3, what do you mean by that? It talks about reverse charge. So again, you will look at that from the perspective of recipient. Now, in this case, understand there are only two events: date of payment, and instead of 31st day, it is 61st day, right? So you will ask, now you will ask, sir, in that case, 12.3, we also spoke about date of receipt of goods. Yes, because goods can be tracked, and I can actually see when the goods got received. It got received on 1/4 because that is the time I received the delivery. But can you ever track receipt of service? No, you cannot track that, right? Because service is intangible. Service is intangible, it is abstract, right? And which is why, my dear friends, all I want to tell you is very simple. Okay, when it comes to service, you will only be concerned with two events: date of payment or 61st day from the date of issue of invoice. Date of payment or 61st day from the date of issue of invoice, whichever is earlier. Is that very clear? Yes. Whichever is earlier. Perfect. Done and dusted. Done and dusted. Done and dusted. Got it? Yes. ठीक है? And the next thing that I'm going to talk about is, my dear friends, with respect to proviso to section 13.3, right? Now, when I'm talking about proviso to section 13.3, the concept is very simple. Firstly, this is an exception to 13.3. So even though there is reverse charge, but 13.3 general section will not apply. The exception of this section will apply. And the reason why this will apply is because it satisfies few conditions of this proviso. And what are the conditions? Very simple. Supplier should be outside India. Recipient should be in India. There should be import of service, and both supplier and recipient should basically be what? Be sharing a relationship of associated enterprise. Associated enterprise. Are you getting it? Yes. And understand, when it comes to holding and subsidiary, right? When it comes to holding and subsidiary, they are associated enterprise. Okay. So look out for such kind of analogies in the question. Only then think about what? Yes, only then think about, my dear friends. Okay, provision. So understand that it's very important that the relationship of associated enterprise is established. Just because it is import of service, don't apply provision. This is a trick question that they keep asking. So, for example, it said B Limited is imported service from A Limited of US. Now, what you will know generally, how does human brain, work? It works in a very different way. It works in a way that understand. What I'm trying to say is that we remember half things. And I'll tell you why do we remember half things. Right? Because you will remember that, okay, 13.3 proviso, okay, supplier outside India, recipient in India, but you don't remember associated enterprise ka important condition. That is important because only if that exists, proviso will apply. If that doesn't, then normal 13.3 will apply. Got it? Yes. And what does the proviso say? Very simple. Date of debit entry in the books of accounts of recipient or date of payment, whichever is earlier. Date of debit entry in the books of accounts of recipient or date of payment, whichever is earlier. What do you mean by debit entry? Simple. Expense to creditors, something like that. So you debit all expenses and losses, right? That kind of debit they're talking about. Or date of payment, whichever is earlier. Perfect. Now, 13, 4, 13, 5, 13, 6 is mutatis mutandis 12, 4, 12, 5, 12, 6. Okay, be it your voucher, be it your interest, or be it residual case, doesn't matter. Whatever is applicable for goods is applicable for service. Goods, service, goods, service. Shame to shape, shame to shape, shame to shape, shame to shape. Perfect. That's it. Okay. Next, my dear friends, okay, what I'm going to talk about is basically section 14, right? Is basically section 14. When I talk about section 14, okay, the concept is very simple. There should be change in rate of tax. There should be change in rate of tax. And then I talk about change in rate of tax. Understand that initially the rate was 18%. And then the rate was 28%, right? And let's say it was 1/4 when the change happened. It was actually 1/4 when the change happened, right? It was 1/4 when the change happened. Okay. And which was that change? Change in rate of tax 1/4. Now understand it can clearly happen where the date of supply is, let's say, 1/3, date of invoice is, let's say, 2/4, and date of payment is, let's say, 10/4, right? So there are few events which occurred when the old rate was applicable, and there were few events where the new rate is applicable. Now the question is, forget about the time of supply. We are also supposed to now conclude which rate will apply, because few events of the same transaction attracts old rate and few events attract the newer rate. Now where will we go? Yeah, where the hell are we supposed to go in that situation? Are you tell? Are you tell? Okay. In that case, my dear friends, all I want to tell you is, okay, we will surrender ourselves to section 14, right? But section 14, my dear friends, plays different for goods, okay, and plays different for service. For goods, the concept is very simple: date of issue of invoice or last day to issue invoice, whichever is earlier, right? Very similar to 12 2, right? So whatever is the day, okay, let's say for example, date of invoice is the earlier date. Then take that date and whatever rate is applicable on that date, right? For example, understand, invoice was issued on 1/4 and last day was, let's say, 2/4. So 1/4 ho gaya, whichever is earlier. Now whatever rate is applicable on that date, right? Let's say on 1/4 the rate was applicable 28%. Take 28. If on 1/4 the rate was applicable 18%, then take 18%, whatever the case may be, right? And in case of service, okay, it's a little, okay, the method is a little different, thoda hatke hai, okay, and you will need to understand that. You will need to understand that, my dear friends, clearly, 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 okay. And how will I teach you that? Very, very, very simple. Okay, so this is definitely there. Now I'm talking about this. Okay, so in case of change in rate of tax, when I talk about rate of services, okay, when in case of change in rate of tax, when I talk about, okay, in respect of services, okay, understand one thing, that there are three events, right? Date of supply, date of invoice, date of payment. So out of these three events, you first check where are two events, okay, actually happening. Majority wins is the case. So first we are going to determine the rate. So let's say for example, these two have old rate and this is, let's say, new rate. Now out of three, two events attract old rate. To understand majority wins, we will take old rate as the rate of tax applicable to the entire transaction, right? But that is just the rate. Now understand, we also need to find out the date because we also have to find out the time of supply. How will we find out? Very simple. In section 14, when it comes to supply of service, the time of supply, okay, will either be in DOI or DOP. DOI or DOP. So understand. Now, since we've taken old rate, we also have to find out time of supply from either of them. Okay, from DOS or DO. And since we know that in section 14, okay, the answer of time of supply is either in the name of what? Date of invoice or date of payment. Do we have date of payment here? No. Do we have date of invoice? Yes. So take that as the rate. Got it? And if you apply this ratio here, you will easily get the answer. Trust me on that. Okay. Trust me on that. Right? Let's check. Okay. So let's say here the rate applicable is old rate, DOI, DOS, old rate, new rate is DOP. In that case, my dear friends, we have majority में DOI and DOS, right? But understand that the rate applicable to us will be old rate. Yes, sir. Also understand DOI or DOS है. To also understand DOI is something we need to look out for because the answer will be either DOI or DOP, whichever is earlier. So DOI आ जाएगा, right? Next, my dear friends. Next, my dear friends. When we talk about, okay, again the next case DOP, DOS, newest DOI. So in that case, understand old rate will apply, right? And DOP will be the answer. In third, again, old rate has the maximum amount of events. But here we also have DOI, we also have DOP. So we want both the events. So in that case, whichever is earlier. Now the same will happen in new. Understand? Here, where are the majority events? New. DOS, DOP. Either the answer is in DOI or DOP. So in this case, we will have DOP. नीचे DOI, here whichever is earlier. Got it? So you don't have to do anything. Just focus out of three events, which are those two events where the same rate is applicable, right? And it will happen. It will happen. Either old rate will apply or new rate. Okay. So in two events, let's say old rate is applicable. Old rate is the applicable rate of tax that will apply to the transaction. But now what about the date? Out of that two events only, now you have to figure out which is the time of supply. And you already know that the answer has to be either DY or DUP. Right? And if both of them are there, whichever is earlier. Simple. That's how you find, okay, section 14 say answer. And then proviso to section 14. So what happens is, my dear friends, okay, sometimes something like this can happen. So there was change. Okay, there was change in rate of tax, right? Initially it was 18 and now it is 28. Now the thing is, my dear friends, very simple. There is there is an issue with respect to date of payment. When will the date of payment get arrived? What is the date of payment, right? Then in this case, my dear friends, what I'd like to tell you is that date of payment, my dear friends, will be as follows. So there are two dates. One is, let's say, date of payment entry in the books of accounts. Let's say it is 1/3, and here date of credit in the bank account is, okay, date of credit in the bank account is, my dear friends, understand, okay, within 4 working days. So in that case, it is very simple: 2, 3, 4, 5. So understand, if your date of credit in the bank account is after 5/4, after 4 working days, okay. So let's say, for example, in that case, it is 10/4. So that is after 5/4. Answer is yes. Then in that case, please understand. Then in that case, please understand that the date of payment will be considered as date of credit in the bank account. Date of credit in the bank account. Got it? Yes. Okay. But let's say, for example, date of credit in the bank account would have been, let's say, 2/4. Now understand, the credit is not after 4 days, it is within 4 days. So government says, chuck this date in that case. The other date of payment, that is the date of payment entering the books of accounts, will be the date of payment. So if it is after 4 working days, date of credit. But if it is within, then date of payment entry. Is that very clear, my dear friends? Yes. Okay. So make sure that it is very clear that if it is after 4 working days, they within a, yeah, that's it. Okay. So that's all I wanted to tell, my dear friends. That's all. I was very clear, okay, with the very with the very beginning, that that is the objective that we wanted to achieve. And yeah, I guess we've achieved. I feel the only thing that you need to remember is that the tough question that they generally can ask is that whenever there will be date of payment, they will either do two things. They will create part payment wala scenario, right? And in that part payment also, they can give two entries. One is, let's say, debit in the bank account and payment entry in the books of accounts. So by doing this, what will happen is they will have like 4 dates. So by that, they can increase the size of the sum. There's a very fantastic sum in your module. It runs into like 10, 15 entries. Just check for yourself. Uh, it's more than enough. So if you have my questionnaire that I had issued for November 23, it's more than enough. There's no amendment required as such, and you can easily refer that. Okay. That's it, guys. I feel that's it. Okay. We've done this in a very exhaustive way, in as detailed manner as I can with respect to the sums. Also, I have, told you where you can get things which can get tricky. And all I want to tell you is that be careful while you solve time of supply sums because they can be trickier at times. Okay, so there is a sum of gas cylinder in that case. Okay, with respect to continuous supply of goods. Do solve that sum. It's a good sum and it does have some weightage and it's a little confusing, so you can definitely solve it and make the most of it. And if you really want to understand how it works out, then please DM me in case having any issues. Okay. So that's it, friends. I will like to wrap up the session here. I hope you made the most of it, MS. I hope you made the most of it, Ria, Mohit, and also Avni if you're watching. And thanks a lot, guys. Please comment and wish you all the very best. I hope I'm helping you in each and every way. And share this to as many students as possible because the entire intent is to make sure that the community of C aspirants, C final aspirants benefit out of this. Okay. Jai Hind, Jai Ma Bharati, Adios amigos, hasta la vista. This is CA Karan Sheth, your tax teacher signing off. Right? Bye.